Hello friends, this is Rajat and welcome back to the YouTube channel. And now today the question is, Ki, how can I take the most benefit of the current market trend? And as we know that the Sensex and the Nifty are at the all times high, and what strategy as an investor should I do to increase odds in my favor to make returns in the current market scenario? So this is the question we will be addressing today. So take the benefit of it. Everything has to be in perspective of your risk tolerance, investment horizon, your asset allocation, when you need the money, how much you are comfortable with taking risk. Now with all these perspectives into consideration, there are 9 ways in which you can still make the best out of the current situation. And what are the ways? The first thing would be in mutual funds or otherwise, there are low volatility funds. So you can select those funds which are of low volatility. That means they will not give you humongous returns, but also they will not give you the crashing losses. So they will provide you average or balanced returns. So even if you want to invest at a current high scenario and you really want to invest into the market, identify those funds which are very good and in having the low volatility, having the beta less than 1. That means they are less volatile than the broader stock market. Point number 1. Point number 2 is, if you are an advanced trader and you're already having a stock portfolio, go for an option trading strategy. You can buy puts. So tomorrow if the market goes down, I am not selling my stocks, but I will gain if the market goes down. Or I can have the straddle strategy, I can have the strangle strategy, or the butterfly iron condor. So that will all depend upon how advanced you want your portfolio to be managed and what strategies you want to adopt for. Then the second is the bond laddering. So here you will be taking money and investing into bonds with the different maturities. Now, since the returns in the bonds themselves are at the higher end, so you can spread it among different maturity and ensure that the cash flow fits in to your needs. Then if you want to venture more into the stocks, you can go for defensive stocks. So when the market is very heated and you still want to invest into the stock market, you can go for defensive stocks like utilities. You can go for consumer goods. You can go for healthcare. So these are the one which provide stability to the portfolio. These are called as the defensive stocks. Again, like my previous video, I told that if you still want to go for the growth stocks or the broader diversified equity, then you can opt for the dividend stocks, the companies which give dividends. So even if you're investing at a higher scale and tomorrow the stock market prices goes down, the dividend to the current market price would remain the same because they pay the dividend on the face value. So technically, profit making company year on year will either give the same dividend or the increasing dividend. So you can still ensure to have certain cash flow coming in by way of dividend. So you can go for big, large cap, cash rich companies, maybe from the utilities or the broader FMCG market, and you can still take the best benefit of the dividends being paid out to you. Then the next strategy is the profit taking strategy. So whatever the portfolio have been there, you can, those which have given exorbitant returns, book profit, book profit on those stocks and stash it in some other low value stocks, or you can say the value oriented or the contrarian strategy type of investing you can do. And lastly, you can go for the portfolio rebalancing. So if my fundamental portfolio is 50-50 debt and equity, and today the equity market has gone up and my exposure to equity has resultantly become 75-25, with 75 being in equity, then I will rather try to sell off 25% extra into those stocks which are at the value buy or debt funds or some other assets, or I will try to diversify my holdings across asset classes like commodities like gold, silver, and other commodity funds for that matter at one end, and geographies, that means investing in India or abroad accordingly. So therefore, if the market has gone high, there are some assets which are doing exorbitantly well, and there are some which are not doing so well. So we will utilize both these things to our benefit as far as the portfolio recalibration is concerned. Thank you so much for hearing me out. And with this, I, Rajat, signing off for now. Have a great weekend. Thank you so much.